Now that we've discussed protected and targeted structure, the best thing to do, as always, is to just dive into some chart examples to get a good indication of how this works in the live charts. We'll start on a daily chart here on Euro Dollar. What we can see is, again, we are creating an uptrend. We've just switched. And as we can see, we're in an uptrend. We're creating higher highs, higher lows, higher high, higher low, higher high, higher low, higher high. And if we're just looking at this from a granular perspective, we'll start in this section right here. What we can see is we create a high. The expectation of this high, if we are to continue bullish, is to pull back in some sort of way, find a catalyst for a higher low to form, and then move to the upside, breaking the previous swing structural higher high. If we are to see an invalidation of the bull trend, we would expect a break and close below the low of the swing structure. In this case, what we can see is price moves to the downside. It starts to retrace, creating substructure. We start to pull back to the upside, and on a lower time frame, as we discussed in the previous video, we started to see minor structure playing out. Once we start seeing that minor structure, we can start to gain the understanding that this high is targeted, this low is protected, but we can also take that a step further and also take a look at this bit of price action right here, and that we have a pivot demand zone. So not only are we seeing price struggling to break lower, and we're starting to see minor structure taking over substructure, we're seeing a catalyst for that higher low to take place. And this is where the biggest importance comes with understanding how market structure is being derived and understanding protected versus targeted structure, and when to know when to use it and how to use it. We need to have some sort of catalyst that's going to put in some sort of higher low. You might see it on one chart, it might exist on a lower time frame chart, it might be playing out on a slightly larger narrative, so we need to take a step back and look at the pieces. But in this case, we have all the pieces that we need. We can see that we're operating under this entire impulsive range in price. We have our swing low and our swing high. We're in an uptrend. Our expectation is that we are going to continue higher, but until we do that, we need to put in some sort of higher low. We would expect to see substructure created, a change of character that then creates minor structure and then finally breaks the previous structural swing high. We know that in order for the bull trend to be invalidated, we need to see a break and close below this low, which would then confirm that this high was successful in its job of breaking the previous swing structure. But if the previous high was not successful in doing that, the low that caused the creation to break that structure would be considered protected, and the high would then be targeted. Now, of course, after the fact, it's very easy to distinguish protected and targeted highs and lows. And this is where we use the three different types of structure to give us an edge on understanding when a higher low is to form and when we can start understanding that a low might be becoming protected to target the previous swing structural high. But again, the importance comes into looking at that catalyst and combining all of those elements together. You can't use just one of the elements and hope that this is going to work. You need to combine all of the elements. You need to combine the overall trend that you're operating in, what swing structure is implying, what's happening within your substructure. You need to find that change of character. You need to see that minor structure being created. You need to have a catalyst for that higher low to take place, which is in the form of a supplier demand zone or a sweep of liquidity, or the combination of the two. And once you get that, you can start to create those decisions. So as we can see, again, just to reiterate, we have that substructure. We start to see that change of character. Of course, the change of character is more visible on a lower time frame. We have a demand zone, and we also do, and we'll touch on this in the next video, a sweep or run of liquidity. So what this has established is that we've tapped into a demand zone. We have started to change from substructure to minor structure, implying that price is willing to move to the upside. So based on that, we can understand that this high is more than likely going to be targeted and broken, especially under the confines that we are in an uptrend and that we would be expecting a higher high to form after all of that has been said. So again, we can just move on to the next example, or we'd be moving between this swing low and this swing high. We can see that this high fails to take out this swing low. We start to see that move to the upside, and again on a lower time frame we start to see the shift from substructure to minor structure. We have a catalyst, which we have a demand zone here via this inside bar, which gives us the indication that price has a reason to form a higher low at that particular point. Once we have all of that, we know that this high is more than likely targeted and this low is protected. And then what we see is price creates another low, and another high. We're trading within this range in price. Price comes up, and again, as we discussed in the previous video, there was some liquidity that was built here, so we disregarded this point. We just have a bunch of equal highs. We create a swing high. This high was successful in breaking this low, because as we can see, we started to try to pull back just before, because we know that if this bull trend is still to remain valid and intact, this daily low would remain, and we could pull back as far as we need to within the range, as long as we don't invalidate that low point in the market. But as we can see, we get to that point, we start to try to create minor structure, and what ends up happening is we just start to break to the downside. So in this case, based on daily price action, trying to understand or identify that this low would be targeted would be incredibly difficult. But this is where multi-time frame analysis starts to come into play. And what we'll do is we'll go down to the 4-hour chart, because this is where multi-time frame analysis becomes so integral and crucial to understand. So what we can do is just dig into this bit of 4-hour price action just to get a better understanding. So what we can see is we've broken this swing high. So this low was successful in taking out this high right here. So as a result, we expect that this low is protected. We start to create highs. Price is struggling to really break and close above this portion. And what we can see is that this high fails to take out this low, and this low is successful in breaking this high. And then what we can start to see, if we're just looking at substructure, because now if I just clear this up and we'll just draw some lines, is if we are still to remain bullish, we would be operating under this range. And if we're just looking at the substructure, what we can see is that this high was successful in taking out this small low, therefore it would be protected. This high was successful in taking out this low, therefore protected. And we just see price continuing to drop. Then we have this low, which was not successful in taking out this high or even this high. And as a result, this would become targeted. This high here was successful in taking out this low. And as we create this low and we start to pull back, we can gain from that understanding that more than likely, once we start to see this starting to reverse, that this is going to be targeted, this would be protected, but ultimately this area is protected. And price continues to switch, and this is where we start to see that change in character on the daily chart. So we're able to get an indication of what's happening behind the scenes using substructure, minor structure. We're using the concept of protected and targeted structure. Because we're creating substructure, we start to break 4-hour structure here. So we have that variance and that change in trend, that change of character on the 4-hour chart. And we're seeing that highs are successful in taking out lows, and that lows are failing to take out highs. Therefore, price will continue to drop as long as that remains true. We can add on the fact that we're starting to see supply being respected as well, and price is continuing to drop. And then we'll just move over to this little bit of 4-hour structure, because I don't have some of that mapped out, so it'll be just a little bit easier. And this will go into the examples that we were looking at in the previous structural videos. And this will also go in line with the swing, sub, and minor structure videos that we discussed in the previous videos. So as we can see that this high was not successful in taking out this low. Therefore, this low, once we start to get that change of character and switch to minor structure, was targeting this high. We now form a new high that creates this low that fails to take out that low. Therefore, this high right here is targeted. And we can even look at it in a granular sense just to understand what's happening in order flow. So the expectation is that this low will take out this high. And what we can see is we create this high. So what we could see is if we're looking at it from a downtrend perspective, we might start to see that we are right here right now. We just have this spot here and this spot here created. So if this is to start going bearish, because also if we just look back, we are in a daily supply zone, we would be expecting a lower low to form. But what we can see is this high fails to take out this low. Therefore, it becomes targeted. And what ends up happening is price runs the high. Therefore, this low was successful in taking out this previous structural high. This would be the switch from substructure to minor structure. And what we can see is that this high failed to take out this low. Therefore, this low becomes protected. This high becomes targeted. All the while, and when we're looking at this in combination, what we can see from that perspective then is that this high the whole time was targeted, and these series of lows were protected. And we can see that process right here, that the lows were getting higher and that each of those lows were being protected. They were not being violated, and that showcases that there is buying interest happening at that price level. And what we can see is this does end up creating a demand zone. And what we can also see, if we just draw on a little bit more information, we can see that we have a demand zone, whether we use the inside bar or the entire wick. We have a new demand zone, which is this entire range essentially, or the pivot. But what we can see is fractally on a lower time frame, we can just use this wick right here, is we have another demand zone and we have another demand zone right here. So what we're seeing as these lows become protected, we're seeing price creating demand zones and running away from them, tapping back into demand zones, running away from them, creating new demand zones. So as we're seeing the stacking of orders. We're seeing lows being protected to ultimately target all of the highs. And that's what the concept of these protected and targeted structures are really doing at the end of the day. They're stacking orders, and that's what's creating the protected lows in this case. A lot of orders and a lot of interest is taking place at this point. Therefore, these lows will be protected. Why? Because large money has entered this area, and that large money is not going to want to take a loss. Therefore, what's the next logical spot? It's going to be the previous structural high. And now we'll just continue moving on. We have this structural low, we have this structural high, but initially it was this high. So we can see that we had this swing in structure. We can see that this high failed to take out this low right here, or even this low specifically, from a just more granular approach. And what does that mean? That this high is more than likely going to be targeted. And what we can see is once price does move to the upside, we've protected this low. We just wick this previous collection of highs, and then we start to pull off. And what we can see very clearly is that this high fails to take out this low, and this low we do get a wick, but we don't actually get a break and close below. Therefore, based on that, and when we look at the lower time frame order flow and look at the change of character from substructure to minor structure, we would be able to start to understand that this high is then going to be targeted while this low is protected. And again, when I spoke about how we start to derive a proper pullback or higher low forming in an uptrend, we would expect to see a sweep of liquidity or a demand zone, or the combination of both. And in this instance, we have a higher low formed at a sweep of liquidity, and then price creates that targeted high, protected low, and then continues to run to the upside, creating a new higher high. So now we'll move on to this little bit of price action. We have this swing low and this swing high. But more specifically, when we are first developing the trend, and we discussed this in the previous video, we would have had this as a swing point as we started to see price moving to the downside and on the lower time frame creating substructure. When we use the concept of protected and targeted structure, what we can see is that once this high is created, the expectation that if this is going to be a protected high, it would need to take out this low. We're in an uptrend, so what we expect with highs is that once we complete some sort of higher low, that the highs would be targeted and the lows would be protected. And what we can see is that this high fails to take out this low. And what we can see is price action here consolidates, and on a lower time frame, what we would see is substructure changing to minor structure. And what that means is that this low is targeting this high, therefore this high is targeted. And when we factor that in, we create a actual swing point on the 4-hour chart. So the concept of protected and targeted structure can also help us understand these small pauses in the markets so that we can truly understand market structure on a higher time frame, just using basic understanding and basic concepts of this high failed to take out this low, therefore it's going to be targeted. And what ends up happening? We run the high, we create this swing structure. And then what we can see is that this high fails to take out this low. We start to switch from substructure to minor structure. We get that change of character. And what we can see is this low was successful in taking out this high. And what we can see is price then continues to the upside. That's where we get our true change of character. Yes, we do end up spiking below this protected low, but at the end of the day, this ends up just being a little bit of a liquidity grab and does not break and close below that structural point. So therefore it is still a valid point of structure like this. And then what we see is price then continues to run this targeted high, because again, when we're looking at this range in price and we were looking at it granularly, looking at it from this perspective, saying this low was successful in taking out this high, therefore it is protected and this would be targeted. But more specifically, we're looking at the 4-hour range. So we're looking at this going that price is not broken below here, we're struggling, and as a result, we're more than likely going to target the high, protect the low. And again, with the catalyst of a higher low, we need to be tapping into a demand zone or a sweep of liquidity or a combination of the two. And what we can see here is we do get a sweep of liquidity and then a continuation to the upside. We are in a larger demand zone as well on the daily chart, which also adds to that confluence as well. And finally, we'll look at this example. We can see that we have our swing low, we have our swing high. We're operating within this range in price. We can see that price then begins to pull back, creating substructure. This high so far has not been successful in taking out this low. Therefore, we're viewing it as weak. And again, we're viewing it as weak under the understanding that we are already expecting higher prices because we are in a bull trend. When we're in a bull trend, higher highs tend to be targeted and higher lows tend to be protected. And we know that for a higher low to form in an uptrend, we would need a catalyst of some kind, whether that be a demand zone or a sweep of liquidity or the combination of the two. And what we can see very clearly in this example is we have this large wick right here. This would be our demand zone, our pivot demand that would be seen fractally on a lower time frame. We can also see that we do have a sweep of liquidity here, and price then runs to target the high. But as we can see in this little bit of price action, we can see that when we're looking at it from a granular substructure versus minor structure, and what we can see when we're looking at substructure, and this is why it's so important to pair the two together, is that we're creating a lower low, a lower low, a lower high. So this high was successful in taking out this low. Therefore, this high should be protected and this low should be targeted. So then what we can see is that this low was initially unsuccessful in taking out this high. So we would again be expecting that this low would be targeted and this high would be protected. And as we see price action continuing to move to the downside, we can see that we're starting to get a change of character on a lower time frame. And what this showcases to us is that this low is successful in taking out this high and is successful in taking out this high. Therefore, this ends up being targeted and it completes our overall theme of taking out the targeted swing high. And this is where swing high targets are a lot more easier to understand and should be your area of focus versus getting lost in the substructure. But what we can do is use the substructure in understanding what is likely to happen, because as we can see here, price failed to take out this low, this high failed to take out this low via this structure. Therefore, this high is targeted, this high is protected. And this is where we had that variance on the 4-hour to daily chart where we were under the understanding that this was our swing structure on the daily chart. We had these equal lows, so chances are that the higher low wasn't actually formed, that this was more of a pause in the market on a daily time frame. So what we can see when we looked at that is that these lows were successful in taking out these highs, so they should be protected. And then what we see is this high is successful in taking out this low. It creates this low. So the idea would be that this low should take out this high if we're still to remain in a bull trend. But what we can see is this low fails to take out this high, which targets these lows. And this process still continues. This high was successful in taking out these lows. Therefore, this low should be targeted. The low is taken. And then we start to see that shift where, and then we see that this low is successful in taking out this high. Therefore, we start to see that this is switching from substructure to minor structure. And that's what this relationship is implying. This is what it's suggesting. And this is just an add-on to understanding substructure, understanding minor structure, understanding the relationship it has to swing structure, and being able to put yourself in the right form. Of course, a lot of this becomes clear when you see it after the fact. It gives you the understanding. But once you start to see it in the moments, when you start to see price struggling to break lows, we can see that this high struggled to break lower. We're starting to see that these highs are more than likely going to get attacked. And then if we use the framework of an impulsive leg, we can say that this is definitely going to be targeted and that this will be protected. But more specifically, this will be protected. And what we can see, if I just clear this all up, is this low does end up getting protected. Yes, we do get a liquidity grab, but we don't actually break and close below this low. Therefore, it is still a protected low because this high was successful in breaking structure. And this high was not successful in breaking structure to the downside. Therefore, it was targeted and price continued to move to the upside. And what we can see is when we looked at this higher low being formed, we had that catalyst. We had a massive liquidity grab and we had a tap into a demand zone. And that is the concept and the idea behind protected and targeted structure. It is an incredibly powerful tool that you can have in your arsenal when you're looking at market structure, when you're looking at swing structure, substructure, and minor structure, understanding how trends are changing, how trends are switching from bearish to bullish, bullish to bearish, and just giving you that inside edge of understanding why particular highs are being run and why particular lows are being run, why particular highs are being protected, and why particular lows are being respected. And when we use the 15-minute as a final example, just to explain some of the price action that we were looking at in the previous video, we'll look at this one in the supply zone because this is, again, a good example. We have this swing low and this swing high, and we're under the impression that if we're in a supply zone, we should be starting to see a bearish reversal. We should start to see that highs are protected and lows become weak, and that substructure and that structure will switch from creating higher highs and higher lows to creating lower lows and lower highs, and that we would see that in the formation of substructure and minor structure before we actually break swing structure. And what we could see just when we glance in this section is that price is just consistently making higher highs and higher lows, higher lows, higher lows, higher lows. So it gives us the understanding that this supply zone is probably not going to hold. But if we just look at it again in a slightly different lens, this low was successful in taking out this high. And what we can see if we're just looking at the 15-minute structure, we created this low. So the expectation would be that this low should take out this high to remain protected and this to be targeted. But as of right now, what we're seeing is price creates a high. It fails to take out that high. So therefore this low should be targeted. And what we can see that this high fails to take out this low, creates these lows. These lows fail to take out this high, therefore this becomes targeted. And what we can see is this high is successful in taking out this low, but is unsuccessful in taking out this low. So therefore, this high should still remain targeted, although it was successful in taking out this bit of structure. It never took out the key structure. So we have an understanding that chances of it moving to the upside are starting to increase. And what we can see is that this low eventually was successful in taking out the high. So we can see if we just go a little bit more granularly, just to further the point and to explain this a little bit deeply. So now that we know that this high right here is targeted because we were unsuccessful in taking out these lows, although we were successful in taking out this low, this is more of a minor low. This would be more of that swing low. You can see that. So we're expecting that this high will get targeted. Price creates this low, and we're expecting that because this high is targeted and this low is protected, that this low should do its job and take out this high. What we can see is we create this high and we can start to see price pulling back, which suggests that this low was unsuccessful in breaking this high. And then what we can see is we end up creating this low, which then suggests that this high was unsuccessful in breaking this low and this low. And we start to see that when price starts to reverse in the opposite direction. So once we start to see this candle, it starts to give us a good indication that this high is more than likely targeted and that these lows still remain protected. And then what we can see is we create this high, which fails to take out this high. So in theory, that means that this low should be targeted. As we can see, we create this pullback, and then we start to get more bullish momentum in the market. So therefore, this high becomes targeted. We have the combination of these targeted points, and what ends up happening, we break that, we target those highs, and we create this high. And then in theory, if we are to continue the bull trend, this low should remain protected, but more specifically, these lows should remain protected. And what we see is price comes down but doesn't break and close below. We get another liquidity grab. Therefore, it hasn't actually broken the structure in a conventional sense. This high becomes targeted, and what do? We target that high. Then what we can see is we have this low. This high is successful in breaking that low. Therefore, this would be the next logical step that could be broken. But again, we haven't broken this more key swing structure that we're starting to play within. So once we create this low and we start to pull back, we can see that this high, although it was successful in breaking this low, it was not successful in breaking these lows, and more specifically these lows. So therefore, this high is more than likely going to be targeted. And we'll touch upon this more in liquidity, but the concept and the reason why this is happening is as price is moving down or up at various price levels here on euro dollar. It's collecting orders, it's facilitating transactions, and as this is happening, we're getting enough transactions or orders to rebalance price. Once price is rebalanced, we start to see price then moving in different directions because the balance has changed once again. And that's the reason why price is moving the way it is, because of that balance of orders. And as a result, what we can see is now that we have an idea that this high is more than likely going to be targeted, we can see that price then runs, breaking that high. We create this high. This high fails to take out these lows. As we can see, price struggles and continues to move to the upside. We have a little bit of a consolidation. I'm sure if we looked on a 1 minute, more than likely a demand zone would exist there to give that catalyst as a higher low within this impulsive leg. And we end up breaking this swing structure. And all of this information that was giving us is that we struggled to really break below these lows. Therefore, it was giving us an indication that this high was going to be targeted. And we were able to use all of the little individual granular pieces to build that idea. We were looking at structure. We were looking at the substructure as it was created. We looked at price as it switched from substructure to minor structure. We've seen that change of character. And then we were using the concepts of targeted and protected structure to give an understanding of when a high or a low would be taken given this entire framework. Because again, when we zoom out just a little bit, we were in an uptrend, so we knew realistically that price should continue in an uptrend because the 4 hour and the 15 minute is trending to the upside. But in saying that, we are reacting off of a potential daily supply zone because the daily at this point is still bearish. But as a result, when we're looking at that order flow, price is failing to really break below swing structure here. Therefore, if this high is not successful in taking out these lows, this high is going to be targeted, and then we can use the substructure and minor structure to build that case, to build upon that idea that price is going to take out that bit of structure. So I hope that this was helpful in understanding the relationship between supply and demand, trends, market structure, the three different types of structure, and then how we can integrate the concept of protected and targeted structure to better understand order flow, to better understand what is happening behind the scenes. I highly encourage you to continue studying these concepts and integrating everything that we've learned thus far onto the charts and becoming incredibly familiar with how all the pieces come together, because now what we're going to be doing is moving on to liquidity concepts, and that's going to start to begin to explain a lot more of these concepts and why they're happening, the behind the scenes look of what's happening on a price chart, why price is moving from one area to the next. We're going to include all of that, and you're going to become even more understanding of what is happening, how we can start to be creating higher probability trade ideas using logic based on market structure, supply and demand, and liquidity.